Talk about De Beers. It's a division of Anglo American and was founded by Cecil John Rhodes in 1888 in Kimberley. The group dominates the diamond mining, diamond trading and industrial diamond manufacturing sectors, producing approximately 35% of the world's rough diamond supply from mines in Botswana, Namibia, South Africa and Canada. Anglo recently bought another 45% of De Beers for $5.1 billion from the Oppenheimer family. Well, as you said, this is the dominant player in the diamond industry, so do we back it? Daniel, let's throw it to you.
Look, they supply a third of the world's diamonds, and they foresee huge demand for rough diamonds and polished diamonds as well. They say that they foresee demand far outstripping supply in the future. And Anglo's obviously has noticed this, and that's why Anglo's has increased their stake from 40% to 85%. Obviously, they foresee that the diamond industry is still going to be very, very profitable in the future. And talking about billetins in Rio, perhaps they're looking to divest from their non-core assets and focus on what they know best in terms of base metals, like copper and nickel and iron ore, etc. So the likes of Anglo's, of course, more precious metals. That's why, of course, they've got the huge Anglo stake. And it just seems that, I think there's still huge growth coming from China. Again, it depends on the economic environment, but China was a huge growth area for them. The likes of Europe is still a huge growth area, as well as America. Believe it or not, about 40% of the diamonds that are sold go to the United States. So a big market for them. But nonetheless, still tough environment. It's still very expensive to get diamonds out of the ground. So the margins, I think, from actually getting the stone out of the ground are actually decreasing, but margins in terms of actually selling the diamond, the product, are actually increasing. So
well, isn't that demand supply effectively? Because there, am I reading this correctly? Yes. Constraints in supply, given that it's so hard to get them out the ground?
Look, it used to be a fabulous business because De Beers controlled the sales. So all they would do is they would de-stockpile when the market was looking roasty, and when it was tough, they would just put the mine. So they basically had like a monopoly thing going, so they could keep the prices nice and high. Now that obviously, wasn't all that likely to survive the modern sort of anti-competitive environment. So now that's broken, and the mines themselves now are just producing as best they can. The other thing which happened in the diamond trade was the cutters used to have enormous quantities of finance available to them from banks like ABN AMRO, who would lend money to the diamond cutting consortiums. Just they would show them the stone. Oh, it looks nice. Give you a couple of $1 billion. They
in a suitcase. Here we go. Here are your 5 suitcases.
Exactly. Happy days. Lots of cash sloshing around. But now that's all kind of broken as well. So if anything, it has become a more cyclical business. That's why I'm not entirely sure that Anglo is doing such a smart thing by buying this business from the Oppenheimer family. I think they're getting the better deal, the Oppenheimers, that is. But the question really on the table here is it worth buying Anglo American because you really like the diamond business? I mean, I guess that is the question. For me, the answer is probably no, because Anglo's got much bigger businesses in platinum, iron ore and copper to worry about, which make it probably wishy-washy for me as an investment opportunity.
Daniel, do you reiterate sentiments there?
It's still big. It's still going to definitely add to their bottom line, and that extra stake that they bought from De Beers will add to their total revenue. In 2011, they made, I think, $7 billion. So it's still a huge business. And yeah, it looks solid. I mean, it's such a big business now that they actually could, at some stage, look at listing De Beers separately, unbundle out of Anglo's and do a separate listing. It is possible, although they have said at the moment it's not on the cards. So, direct exposure to diamonds, your only entry point will be through Anglo's.
Hot or not?
No, not for me. So Anglo not hot, and everyone else seems to be selling their diamonds. The only people who think the diamond mining business is hot seem to be private equity guys like KKR and so on, who are looking to buy assets there.
Even on the other assets within the Anglo American fold, still not hot?
No, look, I think there are reasons. Anglo is a bit underweight, issues in South America, blah, blah.
Fair comment. Hot or not on Anglo American?
On Anglo American, absolutely, yes. At current levels, hopefully it's not a value trap at a PE of 6.5, 7 at current levels, but most definitely, yes. The value add and the foresight that they have with the diamond industry, I would say hot.
Hot.